and will continue to happen later this evening. So we're going to stay with our theme of leapfrogging now, and we're going to be asking a very bold question, which is, are we finished with paper money? How many people here still have paper money in their wallets? All right, one person, I do. I'd be interested to know how much you use it. So innovation in payments, of course, nothing new. We have moved from shells to gold to paper in the few thousand years that we have, as human beings, have been here on this earth. So it comes down to trust. Do we trust financial technology enough to empty our wallets and pay only with our phones? Electronic payments are attracting more investment than any other financial services sector, delivering the highest returns and growth in the sector in the last 10 years. Cash still hasn't disappeared, however. Growth in fintechs has greater uptake in richer countries. We're going to hear from Tanzania today, where one of our speakers saw a return to cash from mobile money recently. So let's discover how we can extend the benefits of financial inclusion to everyone. Coming up on stage, please do welcome the founder of Jirani, Mutonyi, CEO of Airtel, Ferrao, president of Tanzania Fintech Association, Dennis Mwighusa, and co-founder of Fuze, Arpit, Mehta. How are you? Nice to see you guys. How are you? Hello. Right. So, Ian, I want you to kick us off. Tell us how payments are different in Europe to how they are in India and Africa. I'm used to paying with a digital card via my phone, but that's different to the technology that exists in Africa and India, right?
Absolutely, and good afternoon, everyone. The landscape in Africa is completely different to what you see in Europe and the rest of the developed world.
Definition of leapfrogging, in fact.
Absolutely, and over the last decade, I think mobile money has taken that lead, really fueled by a lack of banking and payments infrastructure across Africa. We've seen mobile money evolve to be the primary means of payments across sub-Saharan Africa. Today, there's over 250 million active customers every single month using mobile money to make payments. And about $1 trillion every year is going through mobile money platforms across these countries. So you can see that it's really a SIM card that has your digital wallet, a digital bank on your phone, and through a huge distribution network of agents across the ground, we've been able to build services like cash in, cash out as a basic feature to drive financial inclusion. But you've seen those services evolve over time. So you're now seeing a lot of transfers, borrowing, saving, wealth products, etc., being built into our ecosystem.
And making a huge difference.
And making a huge difference. Financial inclusion has gone up some 30, 40 percentage points in many of the countries just on the back of mobile money.
Interesting. So, Muthoni, let's talk about Kenya. What are the benefits and challenges that using digital payments instead of paper money?
Well, there are great benefits. Thank you, ED, for that question. There are great benefits to using financial technology. The first of all, of course, is convenience. The question you asked is very relevant about whether we carry paper money or even...
Do you carry paper money?
I hardly carry any paper money.
How about anybody else on the panel?
Nothing really.
Dennis, a little bit?
A little bit. Right, so I hardly have it. So I'll go weeks without actually having cash because I can make all the payments. The other thing is there are some aspects where fintech is actually is more secure than carrying cash, because if you carry cash, it can be stolen, but then now in the technology we have now, your financial transaction can be secured by your fingerprint or your face before you make any payment. And that happens with M-Pesa actually. If I go to the supermarket, I'm at a till, I'm making the payment, I will only present my face to my phone and the payment goes through. I don't even have to enter a PIN, so nobody can steal my PIN number because they're seeing me entering it. So I think those are the two major ones. And then, of course, like he mentioned, the financial inclusion. It does enable more and more people to have access to finance. The challenges that I think of is, how we've come to depend on fintech. If it is not working, it's very then inconvenient.
It's so inconvenient. And when there's any pause or slowdown, suddenly I feel a sort of intense anger building within.
Exactly, and there's some small annoyances. Like the other day I wanted to make a payment for parking. It's a small fee that you have to pay because you've parked somewhere in a supermarket, and the M-Pesa at the time was not working just for a minute, and it was hard, and people around me were borrowing money from me to make the cash payment, because at that point I did have some cash. So the challenge there is that if the system is not working, then it does become very inconvenient because we have come to depend on it. Those are the challenges I see. And then there's also financial exclusion, an aspect of it. And in this aspect, the aspect is that, we use mobile phones and internet to access the financial technology. And if you don't have a mobile phone or a smartphone, or perhaps some areas don't have access to good electricity, then it may provide for some financial exclusion in that aspect.
And tell me how big of an issue that is in Kenya.
In Kenya, I wouldn't say it's that, it's hard to know the numbers, but most people in the urban areas do have reliable access to internet and electricity. But in the rural areas, I see where that could be a problem for them because not all the houses have access to electricity all the time.
Right.
And so they may not be able to charge their devices, and then internet may be a bit shaky in the rural areas. So it's a rural problem, not so much an urban problem.
Okay.
Yeah.
So Dennis, I mentioned at the start that cash made a comeback in Tanzania recently. Tell me what happened when the government tried to tax mobile money.
Oh, thank you. The history goes back to 2019 when the government introduced the VAT, which is actually 18%, and excise duty, which is 10% on every transaction which is being made. And then the situation was okay, and huge transactions were being made through mobile money transactions until 2021, when the government now imposed the levies on these mobile money transactions. And this was between 0.004 US dollars up to $4, depending on the volume of the transactions that you are performing. The transactions dropped actually from maybe 295 million US dollars to 2.5 million US dollars. It's almost 100 times as much. And since the situation now seemed to be bad, then the government had to revise and now they deduct, the levies up to 30%. This was actually in September 2021, 2 months after the introduction of the levies. So now it went down up to $1.72 on the volume, big volume of transactions. Again, there was a lot of claims from the public. The situation was not okay. Then the government in July 2022 again waived some of these levies up to 43% again. Right. That is up to 0.86 US dollars for the huge volume of transactions. The situation wasn't again back to normal until October 2022, again, 3 months after waiving to 43%.
So it's gone back and forth.
Yeah,
and
back and forth.
Where are we now?
So in October 2022, the government now reduced the levies between 10 to 50%. And it wasn't so bad, but then they now started, they waived levies from doing transactions between the same banks, but also between the same mobile money. Yep. If you are doing transactions between the same mobile money, then it was waived and deducted to a small amount if you are transacting from different banks or right. between different mobile monies. And I can say so far the situation is not bad, and because now you can be able to transact free of charge if you are doing it from the same banks or same mobile monies. But if you are withdrawing, doing transaction to the mobile money agents or the ATMs, then now the charge up to maybe $13 is free of charge.
So money definitely is an issue. So Arpit, I want to bring you in. You've spent 15 years in financial services, payments. You've seen India catapult from cash to digital. That issue there that Dennis spoke about is really one about trust, right? I mean, it's about how it impacts your pocket and whether you trust the government, whether you trust people to treat your money well. So talk to me about what you've learned.
So I guess in the last 8 years, India has seen a significant advancement in digital payments, especially with the launch of UPI, right? And while she was talking about the bottom of the pyramid penetration of digital payments, I think India has still 56% penetration in that bottom of the pyramid segment for UPI, right? Which is very significant. However, I think fundamentally, there are 3-4 main reasons that someone uses cash, right? Like, of course, one we spoke about, financial inclusion, which in India is, so 83% of whole of India population has a bank account now, right? And then one of the core uses that has solved is actually the direct benefits that government passes to this bottom of the pyramid segment without any intermediary in between, right? So from that perspective, it is solved a lot. But from a trust perspective, as a user, right, you also think about whether the availability of internet is there all throughout, right? Or the device that you have will be functional all the while, right? And the present example would be Manipur, right? Where you don't have internet for last 200 days. So you have to fall back on cash as a payment mode. So when I say trust, I think the trust is about that predictability that the underlying infrastructure required for financial services or digital payments will be available always, right? Like that predictability. I think that India has solved to a great extent, but it will take a long time to get it to 100%. Otherwise, cash will always be the fallback option.
So what role, interesting about how cash may still be part of it, what role do you think paper money will play in the future of financial services?
I think paper money is here for a while. I don't think we'll be able to cut it off for a period because there are some people particularly I would say in the older generation, who still like to have paper in their hands, the paper cash in their hands to feel like it's true money. They think that the money that's in the phone may not be real true money. So there's an older generation and even perhaps some younger people who would prefer to have cash. So it's not going to go away for a while. It may decline, the use of paper may decline with time. The other reason why I see paper money may still exist is some people want to pay for things that they don't want others to know that they have paid for. If you can think of some of the vices that people may have, and they wouldn't want a track of their records saying that they paid to that place, maybe that's a place where paper money would still come into play for a little period. But with time, like I said, we may see it decline over time. And the central banks are likely then to start also to digitize the fiat currencies and then bring up the CBDCs instead.
Okay,
so,
well, we'll get to that one.
Yeah.
What about these ideas around the group savings that I know happened in some of the more rural areas? So these are, I think, chamas or sacos, where groups of people get together, put their cash together in order to invest in something, education.
Yes, that's an interesting point you raised. Even just last year, I was working on a project to try and digitize those payments. So chamas are groups of people that come together. It started mostly with women. They come together and they save together so that they can pool the money together and do things with that money. And it seems that those chamas prefer to have cash. So they'll have meetings like every week or every month. And at those meetings, you are required to come with cash. They haven't quite embraced the digital payments for the chamas. They'll use digital payments for other things, but for the chamas, when you come to the meeting, they expect you to come with cash. And then somebody from like an administrator or a treasurer will take that cash and go and deposit it into a bank account on behalf of the chama. So even as late as last year, we were working on trying to digitize that process so that people can send the payment digitally over to the bank. So for a period, I think it will take a while for people to get away from cash in the chamas.
And you had that experience too, didn't you?
Yeah, absolutely, absolutely. And look, from my perspective, I hope there's no role for paper because if you look at who we're competing with, I always say we're not competing with other telcos or mobile money businesses, we're competing with cash. And still today across Africa, at least 80 to 90% of transactions are happening in cash, which just shows the runway that we have as mobile money operators. In terms of trying to get cash out of the system, SACCOs is one area that's been very, very difficult. I think we've all tried with digital solutions.
What's the hang up?
I think when you go to the rural areas, that feel and that trust element is the most important. We talked about trust earlier. Building that trust takes an awful long time. You'll see when a customer comes on board, they'll check their balance 5-6 times a day just to make sure that the money is still there. As that education starts to build and that trust factor starts to build, I'm certain that even the rural savings groups will move over to a digitized solution.
So financial education is such an important part of this entire journey. Dennis, tell us about your role, financial education, how you see the population being educated to bring them along.
We are trying, and some of the objectives of our Fintech Association is to make sure that we educate, especially those the underserved. The underserved can even be in the urban areas, so to make sure now they get a proper education on the proper usage of these digital financial services and
what works? What's the
products.
program that's worked?
What
has worked? Give me an example of something that's worked.
It has worked, and for example, like Muthoni was talking about these small groups of lending and women. Yeah, at the moment, monies have also introduced some of groups in their own, like Vodacom. They have something called Mkoba. So this is actually to emphasize on the usage of mobile money in terms of deposits and withdrawals. So we are educating these the underserved, in the rural areas, in the urban areas, to make sure now they make a proper use of digital money. So I think with time, we get there.
Okay.
It's a matter of time.
Arpit, I want to talk about digital bank currencies. You brought it up. How are they going to be useful for countries like the UAE?
Sure, yeah. So I guess I'll just compare cash with CBDCs or digital bank currencies, and then probably stable coins for payments, right? And then at Fuze, the company I co-founded, that's one of the core thesis that we have being a blockchain company, right? I think if I have to recap what cash solves for you or what is required, cash does not require you to have reliability on the basic infrastructure of smartphone or internet, all of these. Cash provides you privacy and anonymity for some of the transactions that you want to do. And then cash solves another important problem, which is what we talk about instant settlement if you're a merchant taking a transaction at zero cost, right? I think these are, and then one of the reasons why a lot of Europe is still deals in cash, right? It's not because you don't have card penetration, but it's because the merchants see 2.5% MDR or fees paying. They don't want to do that, right? So cash solves that, right? And that's why it's still the best option if you put together all of these three problems, right? When you move to digital payments, you probably solve two of these three problems, but not all three. Right? When you move towards CBDC or digital payments, right, which is nothing but permissioned ledger, right? It's not really a blockchain per se, right? It's just a permissioned ledger that central bank is building or launching, right? In my personal opinion, it solves a lot of problem in the wholesale settlement piece. But on the retail side, once you have UPI or M-Pesa and all of these penetration, right? Like it still does not solve that problem where you have reliability on phone or internet, right? Like, so again, two of the three. It does not solve for privacy and anonymity because it's still programmable money, which central bank can always say no to. So it's not an alternative for cash, how probably this is being marketed for the retail side, right? And definitely it's, you can easily argue that this is scalable, instant transfer, all of that, right? But I personally, for the retail side, do not see this as a huge disruptor for, let's say, UPI or M-Pesa or any of these digital payments, because the use cases this is solving is pretty much same. From a central bank perspective, it solves a lot of problem of printing money, distribution costs, all of that, right? But the end user is not worried about that, right? The end user doesn't care about the cost of central bank. The end user cares about his cost, his user experience, his existing behavior, right? So that's my personal view how these things will evolve.
So I know, Muthoni, you wrote a paper in favor of digital bank currencies for the government of Kenya. They haven't yet acted on your excellent advice. But what did you argue was going to be so good for Kenya?
Yeah, so last year, the Central Bank of Kenya did request for opinions from the public, and I sent back my opinion to them. And why I thought CBDCs would be beneficial for Kenya, I think there are a few. So one important one is sometimes the government will send money to the public for various reasons. So let's say they need to, for social benefits, for example, they need to pay a family money so that that money can be used to buy food for the family. So sometimes what happens is that money is sent to, let's say, the man of the house, and the man of the house might use that money and go to the bar, right? And if the money is programmable, it may be possible to stop the man from going to spend the money in the wrong place, and the money is programmable to go to a specific use. And I thought that's a big reason to have a CBDC. It may also promote financial inclusion. Because I imagine with a CBDC in place, you don't have to depend on having a bank branch near you for you to be able to use your money. So therefore, because it's all on, it's digital money and you can use it on your phone, so you don't need to go looking for a bank branch. And that can be a barrier for some people. For many of us, traveling from here to there may not be such a big deal, but for some people in the rural areas where there's not a lot of branch network, moving from here to there is a big deal. It takes a big chunk of their money to buy the bus fare or to pay somebody to take them to a place. And so it does promote financial inclusion in that way. And then the third one I can mention is reduced transaction costs. When he was talking about cash coming into play in Tanzania, people were rejecting digital payments. That also kind of, there's a bit of noise around that in Kenya because we do depend a lot on digital payments. But when you look at the transaction cost, it can be a bit pricey. And so there was a period there where merchants were telling you, no, I don't want your M-Pesa, go find cash and bring me cash. Right. Not so much, but there's a bit of noise. There's a bit of noise about that. So perhaps with a CBDC, there may be reduced transaction costs, and merchants and people like us, consumers, may not feel so much pain with their transaction costs. And finally, I guess one more I can mention is if multiple countries in a region are using CBDCs, there's probably a futuristic view, but perhaps then cross-border trade would be enabled. If, let's say, we're doing transactions between Kenya and Nigeria, and both countries have a CBDC, perhaps the transactions between the two countries might be easier with a CBDC.
Dennis, do you want to expand on that issue around trade at all, and then we'll come to Arpit.
Thank you. We have actually not started in Tanzania, but with the current National Financial Inclusion Framework, which came out recently, it is recognized that now we have to start using that kind of technology. So I think going forward, then we'll get there. Yeah.
Arpit.
I just want to quickly put some light on, or probably put forward a point of discussion, right? Definitely CBDCs would reduce the cost of transaction, right? But at the same time, I think if we think it from a fundamental base level discussion of, let's say, CBDC is a product by central bank, and the banks or let's say M-Pesa or UPI, right? Like the banks and the telcos, and these are all distributors. If they're distributing a product, and of course a product cannot work without a distributor, right? If they're distributing the product, they need some financial incentive to distribute it. Right? If you remove that interchange or MDR or whatever you want to call it, right? They have no incentive to distribute it. Right? How do you then make a retail CBDC successful if there are no distributors or if they do not have enough economic incentive? Right? That's one. I think the other interesting thing that UAE has just launched, right? Like, so UAE a month back launched a consultative paper for regulated stable coins, right? And then I guess in this room, most of us are aware about stable coins like USDT or USDC, which are the two largest stable coins. Like USDT has a market cap of 85 billion, USDC around 35 billion. So they're decently big, but unregulated, right? So the masses still don't have trust on these, right? Because these are not regulated, right? Like masses want to place trust on government, on sovereign, right? UAE came with this proposal consultative paper right now, and hopefully the framework or the regulation will follow next year, where they are saying that central bank will issue license to banks or private players to issue their own dirham-backed stable coin, right? Which in my mind would be revolutionary. Because unlike CBDC, it also solves for one more problem, which is privacy and anonymity, which is what cash provides you, right? Like if I, like of course, at the initial level, I do my KYC, all AML checks are done, but from there I can move it to my own decentralized wallet where I own the keys. It's pretty much like putting cash under my mattress, right? Like, and it solves for that particular use case also, right? So, and while we'll see over the next 2-3 years how this landscape will evolve, but I guess a regulated stable coin on blockchain provides, again, privacy, anonymity, and the real-time settlement, zero cost or minimal cost. And the adoption comes from masses directly without the necessary requirement of a bank to distribute it.
Right, interesting. I want to get the audience involved. If anybody has a question here, anyone have a question? Yeah, can we get a microphone just here? And any other question? We'll take two. If there is one. Okay, here we go.
Yeah, hello. So, Madam mentioned that there are a lot of cooperation happening between African Union, especially travel to other countries with visa and all. So I'm just trying to understand. For example, there is a strong.
We're running out of time, so quick question.
African Union is there. So I'm just asking, what's the possibility of having a central bank for African Union, and then initiate something like the NPCA things which has happened in India, so that, this has been, because the population and all those things matches with the entire India. So what can be the problems which can come? Of course, we know the possibilities. What can be, is it something like an idea which can be implemented?
Okay,
because the
great.
entire, thank you.
Thoughts?
I can take that, and maybe Dennis can also do it. I think it's a good idea, but I don't think it is quite comparable to the India situation, because in Africa there are so many different countries, so many different regulations, and even languages are different. So the African unity, the African Union that you mentioned, it's really good, but for us to have one central bank, it's a nice thing to have, but I'm not seeing it in the near future for Africa.
Ian, did you want to come in?
Maybe to add to that, 54 countries, different regulation, different currencies. However, there is a lot of Pan-African trade that's starting to build up. And actually, mobile money plays a huge role in inter-country trade. For example, Airtel's in 14 countries. You're able to switch payments between all of those currencies through our platform on both ends.
Give us some numbers there. How do you see the platform being used in terms of increasing trade?
Yeah, look, I think if you look at our platform today, we do about $120 billion of transaction value annualized. Today, the international money piece is still quite small. It's coming to about 1.5 billion annualized. That is growing at the speed of 100% every year. So I think that's before we've even opened up all the routes. The more routes that we open up, the more inflows and outflows that will start to happen. The more trade will start to expand, the faster the economies will start to grow. So I think we're playing a huge role in opening up the African states to not just Pan-African, but also global trade as well.
Running out of time, I want to briefly touch on cryptocurrency, which is under a deep black cloud of rain after Sam Bankman-Fried's trial in the US. Arpit, what impact is this having on crypto in the Middle East?
Yeah, I guess it's a very, again, I'll go back to the fundamental issue of trust, right? There are only two ways you can have trust in crypto world. One is extremely decentralized. People trustless, permissionless protocol. They are not trusting on any third party. Or extremely regulated, where you are trusting the government, the authorities, right? FTX or any of these 3AC or Celsius, any of these examples are examples where it was neither of these two, and they were centralized in between, right? Like unregulated, centralized platforms. And in any of these cases, as you scale, human greed always takes over what's best for the consumer, right? I guess Middle East, especially UAE, has established a very strong regulatory regime, right? With ADGM and WARA in Dubai, right? And you are seeing, because of that, all the global Web3 companies coming here, getting regulated, and then doing business from here for the world, right? And that builds a lot of trust.
It doesn't feel like it's had too much of an impact.
Yes, right? So it's not the Wild West that we have seen in probably last 2-3 years, right? And that regulation, I think over the next few years, we will see across the world.
Okay.
Yeah, so, yeah.
Briefly, Ian, tell me your best partnership that you've made and how this is impacting digital
Thanks,
money.
Idhi. Look, I think our whole business is about partnerships. We really see ourselves as a platform. We're enabling partnerships with financial services through our loans marketplace and our savings marketplace, through international money transfer with all of the hubs and the MTOs of the world who are sending money in and taking money, money transfer organizations across the world, Western Union, MoneyGram, Remitly. But I think probably the most powerful partnerships have been with government, NGOs, the World Food Programme, World Health Organization. where there's a need for aid, we're able to disperse aid into areas that nobody else can get to.
And we know that
for
direct
example,
money, cash transfers are better used.
Absolutely. So like in Malawi, where there's been flooding or there's a real need to get aid, we've been the ones to disperse and ensure cash gets to whoever needs it and that they're able to survive through those periods.
Okay. We're out of time, so I'm going to get a quick whip through. Tell me the year you think we'll see cash disappear in your country.
That's a good question. Which year? 2080.
2080, okay.
I wish it would be 2050, but we're probably saying 2100.
Okay. Dennis?
We still have a long way to go, and maybe 2000.
All right.
Not in our lifetimes.
Not in our lifetime. All right, ladies and gentlemen, let's give them a huge round of applause. End of the road for paper money. Not yet. Thank you.
Thank you.
Thank you so much. Apparently.